Hello, welcome to an ABC class. I mean an activity-based costing class. Let us jump in. I hope you are well familiar with the process of overhead application from job costing. It is important to review the basic concepts before we build on that. So far, we have seen that companies pool all their indirect costs into a pool called manufacturing overhead and use an allocation base, most popularly direct labor, to assign these costs to various products. We also said that companies typically use estimated or budgeted numbers to calculate a rate because actual costs are not known until year end. So, we divide estimated overheads by estimated activity in cost allocation base to get a rate. Next, we use this rate to apply overheads to actual jobs or products or patients, as the case may be, to get the final allocation. This method is simple and worked well until recently because companies produced a limited number of products, mostly using a labor-intensive technology, so that there was very little difference in the overheads consumed by each product. Moreover, direct labor information was easily available and was a large proportion of total product costs. There was also a belief that direct labor and overhead costs were highly correlated. For example, if labor worked longer hours in the factory, more utilities will be consumed, more repairs, maintenance, and depreciation will be incurred, etc. As we will see later in more detail, a single plant-wide rate that we have been using so far can lead to cross-subsidization, meaning showing too high a cost for some products while showing too low a cost for others. This feature of assigning costs across products without really recognizing the amount of resources used by the products is the reason why single overhead cost allocation system is also called peanut butter costing system, meaning spreading costs without a cause and effect relationship. As we have emphasized before, it is important for managers to know the correct cost of making a product because a lot of pricing and other resource allocation decisions depend crucially on knowing what each product costs to make. Let's quickly go through an example from job costing chapter to make sure we know the steps to use a single overhead rate for costing purposes before we move to a multiple one. For job 420, you are given the cost of material, labor, but indirectly you are given number of direct labor hours used and rate per hour. Finally, you know how many units were made. For manufacturing overhead application, you are given the allocation base, which is direct labor hours in this case, and also the overhead rate. We need to put together the three manufacturing overhead costs. Direct material is easy. Direct labor is also easily done. Manufacturing overhead rate of $20 per direct labor hour will be multiplied by the actual direct labor hours consumed, which gives us a manufacturing overhead applied of $40,000. Now we have the total cost of the job. If we divide this number by the number of units completed, we get per unit cost of $28.50 a unit. In today's environment, the simple method we have learned so far to cost products may not give us good results. These days, companies produce a variety of products or serve clients of different sizes. Also, direct labor has been shrinking in importance due to automation, and manufacturing overheads as a percentage of total manufacturing costs is increasing. Many of these overhead costs may not be correlated with labor at all. Lastly, data gathering has become a lot easier due to Excel and other internet advancements. So now, a single overhead allocation rate may not be optimal for many firms, especially those that make a variety of products and are not using a lot of labor in their production process. ABC is a technique that extends our overhead allocation from a single rate to a multiple rate system. The technique to calculate the rates, the method to apply overhead to different products remains exactly the same as in job costing, with the only difference that we will be using multiple overhead rates instead of only one. ABC tries to identify all major operating activities, then determine the cause of their usage, also called cost driver, and then assign activity costs using multiple drivers to cost objects. To the extent that it is not an aggregated single driver system like the job costing system, it tends to give more accurate results. As we will see later, many companies shift from traditional costing system to an ABC system once they realize the inaccuracy in their current cost system. The best way to go through the steps in ABC would be to work through a simple example. Let us look at the information given and process it slowly. The company makes two products and currently uses direct labor hours as its only allocation base. The direct labor hour requirement per unit will be useful to figure out how many units were made for each product. Total manufacturing overheads are $100,000. Additional information to be used in ABC shows that the company has three activity pools instead of only one, and how much consumption of each activity is done by two products is also given to you. Notice two things. One is that total of estimated overhead costs remain at 100,000. Now they are just split into three pools. Second thing to note is that activity 3 uses direct labor hours as its driver. Activity A uses a total of 200 hours. If it uses zero point 0.5 hour or half an hour to make one unit, how many units do you think they made in 200 hours? 200 hours divided by 0.5 will give you 400 units in A, and 100 hours divided by 0.4 will give you 250 units for product B. Now we are ready to tackle this problem. First question is about the traditional or simple costing system. Since all manufacturing overheads are assigned on the basis of direct labor hours, we divide overhead costs of 100,000 by total direct labor hours in A plus hours in B. We get an overhead rate of 333.33. Are you okay with this? Next question wants you to calculate per unit overhead cost of product A. Remember, overhead cost, not total cost. Under the traditional system, we will calculate total overhead applied to product A first and then divide it by number of units to get per unit cost. In step 1, we use the estimated overhead rate we just calculated, so we have 333.33 per direct labor hour. In next step, we multiply this rate by actual number of direct labor hours used by product A. You might have to refer back to the original problem for information here, but you will see that product A uses 200 direct labor hours, so the overhead applied to A will be rate times actual direct labor hours, giving us total overhead applied of 667.67. Dividing it by number of units of 400, we had figured out we will have per unit cost of 166.67. Keep this figure in mind. We will be using it for comparison with ABC later. Remember, this is the overhead assigned to product A under our traditional costing system. Let's move on to an activity-based costing system now. First question is asking you to calculate an estimated overhead rate only for activity 1. So you take the dollar amount of overhead cost in activity 1 from our problem, divided by the estimated activity in this pool to get a rate of 16.67. Easy. Next question is the same as in traditional costing, about the amount of overhead that will be allocated to product A. This is a two-step process. In the first step, we will finish calculating overhead rates for all the three activities, just as we did for activity 1. We divide dollar overhead cost in each pool by total activity in that pool and get three different rates instead of one. Notice that the rate for activity 1 is just copied down from the table above. and the procedure to get the rates for the other two is exactly the same. Now, we will have the final step in which we will multiply these rates we calculated by actual activity in product A. Let us see. In this step, we just copied the rates we calculated in the previous slide and multiplied them by actual activity in product A. The total overhead cost assigned to product A will be $43,000, which comes to 107.50 on a per unit basis. Now, refer back to the cost allocated under the traditional system on slide 7. It was a total of 66,667 point something as opposed to 43,000 under ABC. On a per unit basis, cost assigned to A comes down to 107.50 from 166.67. That is a huge difference in cost assigned to a product under the two methods. Two questions come up. One is, why did this happen? And the second is, which of the two numbers is more accurate? The answer to first question is hidden in the relative importance of direct labor hours as a cost driver. If you look at the original information given in the problem, you will notice that most of the overhead costs are not driven by labor hours. And B consumes a lot of the resources under activity 1 and 2, but does not get its fair share under the traditional method because it consumes very few direct labor hours. So product A gets more cost in the traditional method because it consumes more labor hours. When we use activity-based costing, product B gets a larger share of the other two activities but a lower share of activity 3, which is still allocated on the basis of labor hours. The second question was, which method is more accurate? Answer to this one is simple. Since ABC breaks up total overhead cost into different pools and different drivers are used for each pool, it is likely to be more accurate. Now, do you think you can redo this exercise for product B? Remember that your answer must assign $57,000 to product B because under ABC we have assigned $43,000 to A already and the total overhead costs of the company are still $100,000. Second thing to note is that the three rates we calculated on slide 8 will still apply when we do the calculation for product B. They just need to be multiplied by actual activity in product B now. If you cannot, you should go over product A calculations to understand the whole thing. To implement an activity-based costing system are quite similar to those used in job costing. Let's review them. In the first step, we decide what are the important activities in the company and how many cost pools we want to work with. Next, we estimate the overhead dollars in each activity pool. Third, we choose the best cost driver for each pool and estimate the total quantity of drivers so that we can calculate the rates for each activity. Once we have the rates, we apply them to the product by multiplying the rates by actual activity in each product. In the activity-based system, activities are combined at 4 different levels. As the name suggests, unit-level activities are performed each time a unit is produced. For example, a handmade unit will need direct labor hour time on a per unit basis. Another example would be power consumed by machines to make a unit. Unit-level activities typically use number of units produced as its cost driver. Batch-level activities are performed each time a batch is processed, regardless of how many units are in the batch. For example, a car company making a 2-door sports car as well as a 4-door SUV will have to set up equipment each time the company shifts from a batch of sports car to SUVs. Batch-level activities may use number of setups as its cost driver. Product-level activities are costs related to specific products. For example, cost of designing or advertising a product are product-level activities. These activities might use hours of design time as a cost driver. Finally, facility-level activities are carried out for the company as a whole, regardless of how many units are made, how many products are made, how many batches are made. For example, heating the whole factory or salary of the CEO are facility-level activities. This discussion of different types and levels of activities is useful in picking the best cost driver for each activity pool. Let us practice a few things in this chapter. Firstly, let us see if you can come up with an example of each type of activity, each level of activity. I have included one for each type. So the more units you make, the more wear and tear the machine will have. So it is a unit level activity. On the other hand, the more times you change your setups, the more costs you will have. So this is a batch related activity. When you store, order, or account for spare parts, they must be related to a particular product, making it a product level activity. Finally, when you pay property taxes or buy insurance for the factory, it does not matter how many units or how many batches of products you made. So, this is a facility level activity. Next question is a simple logic question. It says that traditional costing system assigns equal cost to X and Y, even though X needs less activity than Y. So it looks like currently Y is undercosted and X is overcosted. Does that make sense? When activity-based costing fixes the problem, it will find that Y is being charged less, even though it takes more time to make. So our correct answer should be A. Before we go, let us do a comprehensive problem on traditional versus activity-based costing systems. We are given a company here that makes 3 products, and although we have individual information on units, selling prices, material and labor costs, we have only limited and aggregated information regarding manufacturing overhead costs, which are oven plus packaging equaling $350,000. We also have information regarding cost allocation basis in each pool, and activity usage is given to us for each product. You can print out and keep these numbers so that you don't have to keep flipping back. So, our first question is about the estimated overhead rate for the packaging pool. What do we know about that? We know that we divide dollars in that pool by allocation base in that pool. So we get an overhead rate of $150 per packaging hour. Next question picks product S out of the 3 and is asking you to calculate overhead assigned to it under the activity-based system. With one additional twist, it wants to know the cost of each batch rather than a single cookie. We will see about that, but first things first. What is the total overhead assigned to product S? Remember, it will be the activity rate of each pool times the activity consumed by product S in that pool. Here, we have 2 pools, oven hours and packaging. We already calculated the rate for packaging in part A. Let us do the same for oven hours first. We divide dollar cost of $200,000 in oven pool by total oven hours and get a rate of $100 per oven hour. Luckily, we are given the activity usage for a batch. So we take actual activity of 0.5 packaging hour and multiply it by the rate we got in part A, and then take the oven rate of $100 an hour times the oven hours consumed by a batch of S cookies. Since there is 1 oven hour, we get 1 times 150. Total overhead assigned to product S under activity-based costing would be 175. Next question wants to know the profit earned on product S. So we make a mini income statement for our product S by subtracting all manufacturing costs from its sales revenue. Since we need profit for a batch, we multiply sales price of 80 cents per cookie by number of cookies in a batch, which is 1,000. So we have revenue of $800. Next, we put together material, labor, and overhead costs to get to operating profits. Direct material is given in the problem at 0.20 per cookie. Direct labor is given at 2 cents per cookie, and manufacturing overhead is given at $175 per batch from part 1 above. Total costs for s'mores are going to be $395, and total profits are going to be $405 for each batch of some more cookie. This slide repeats the two questions we answered for ABC system, but this time questions are about the traditional system. Part C1 wants to know the overhead that would be assigned to product S under the traditional system of using only direct labor hours as the allocation base. This one we know well. So let us compute the estimated overhead rate first. The total overhead of 350,000 divided by total direct labor hours will give us an hourly rate of $350 per direct labor hour. We multiply this rate by actual consumption of direct labor hours by product S. Since it consumes only 1 hour per batch, overhead assigned will be 1 times 350 equal to 350. In the next question, we get the profit on product S under the traditional system. Remember, the sales revenue, the direct material and direct cost will all remain the same. Only manufacturing overhead will change. Here, we charge an overhead of 350 and get a profit of $230 per batch. Remember the profit under the activity-based costing system for product S? It was $405 per batch. What is the difference in the two profits? 405 minus 230 is equal to 175. Can you recall that number from somewhere? Do you remember the difference in the overhead charged under the two systems? The difference was exactly 175, which is the same as the difference in the profits. So, here is the bottom line. Although both methods are correct and are legally acceptable, they produce different costs and therefore different profits. Also important is the fact that two methods can differ only with respect to indirect cost allocation. If a method assigns lower cost to one product, it must be assigning higher cost to some other product in the company, since the total cost of the company has to remain the same. Finally, whether a company should stick with a simpler system but slightly less accurate method of traditional costing or switch to an ABC system should depend on how big the cost is of switching to the new system and how big the benefits will be of obtaining a more accurate cost number. Enjoy solving ABC problems.